Okay, peeps, welcome back. So today we're going to be talking about why the new YieldMax ETF, known as YMAX, could be a great investment. Let's get it. So the first reason why I personally think that YMAX could be a great investment, whether it be a great investment long term or not, that remains to be seen, is because this particular fund is a fund of funds, as they call it, which is all encompassing of, I believe, pretty much every single stock ETF that they already have, with the exception of OARC, because that's based on an ETF, not a single stock. So I have downloaded the, unfortunately, don't have Excel on this particular computer yet, but it allowed me to pull this up. So you guys can see all the different positions that they have here. We have the C3AI, AMD, Amazon, Apple, Coinbase, Disney, Facebook, recently renamed Meta. That was at the end of the previous bull market. Google, JP Morgan Chase, Moderna, Microsoft, Netflix, Nvidia. Here's the ARK Innovation ETF one. PayPal, Square, Tesla, and ExxonMobil. So it would appear, it looks like we have 3, 6, 9, 12, 15. Yep, that would be all of the current ETFs that are available through the YieldMax website. And you can also see it here. So basically I went down to this and I clicked on this button, and that's how I got the Excel spreadsheet that shows everything with all the trades and all that. You can see it here. If you guys want to look at this, there's also a tab for intraday trades. You can check that out too. I know that Retire on Dividends on YouTube does some stuff like that. I'm not sure exactly how he does it. That's fine. We don't really do that here at our channel because we have a lot of different stuff that we're doing. So, but as you guys can see, like a quick synopsis overview of what all the different ETFs within this fund of funds is. Expense ratio could potentially be a little bit higher, as you can see here, but again, they are basically paying you an extremely high yield based on an overall diversified ETF, not just a single stock ETF. So point number one here is that this is a diversified fund. You have heavy diversification, okay? So you have 17 different single stock ETFs. That does not include any new ones that they might make, and they may also add to this fund. Because keep in mind, they could just continue making more of these single stock ETFs and then add them to YMAX in the future. So in my opinion, you're paying for not only what you're getting now, but what you might also be getting in the future. Don't quote me on that. That's pure speculation. So with that being said, the number two reason why it could be an exceptional holding that could be a great investment is because of the high yield. Now, what the high yield could be, I'm not entirely sure yet. I will have to create a separate video for you guys on that and try to run some math equations as to what I personally think could be the yield. But I would say, based on historical data between all of these ETFs, I don't think it's unreasonable to assume that something between maybe about 35 to 50% on a consistent basis could be possible. I would say probably somewhere around what Tesla pays would be a realistic yield, somewhere between like maybe to 35, 40 cents up to 60 cents per share is probably, I would say, reasonable in my opinion. Of course, I'm not the fund manager. I don't know exactly how these things work. So that would be a question for the fund manager to ask him directly as to roughly how much of an estimated yield these things will produce. But as they've told you guys in the disclaimer, the fund's primary objective is to create income. Secondary objective is price exposure. So the third reason why I think this could be an exceptional ETF is because of the growth potential. So think about this for a second. You're getting access to all of the different YieldMax ETFs, okay? And all of these different YieldMax ETFs are based on some of the largest companies in the United States, okay? We're talking the Magnificent Seven and other massive 10, 100 billion, trillion-dollar companies, okay? The most well-established companies in the S&P, in the NASDAQ, and in the United States. As you guys know, the United States has the largest GDP in the world, bigger than any other country on the planet. As a matter of fact, Apple is bigger itself than some of the GDPs out there in the world. So you're getting the Mag 7, you're getting Tesla, Apple, Amazon, Google, Netflix, Microsoft, and NVIDIA, that is the Magnificent Seven, but you're also getting the largest bank in the world and in the United States, which is JP Morgan. You're getting PayPal, that's a big company. Moderna is a massive medical medicine science type company. You're getting the ARK Innovation Fund, which itself is an ETF and also has a very large market cap. Then you have Facebook, which I guess could be considered to be part of the Magnificent Seven. It's either Facebook or Netflix, which is not in there. I forget which one. Then you have the largest crypto exchange in the United States, which is Coinbase. You have Disney. That we all know that Disney's huge. They've been around for years. ExxonMobil is the, I believe, second largest oil producing company in the country, second to Chevron. And then you have a chip manufacturer, which is AMD, and also NVIDIA is one of those as well. And then you have Square, which is things like Cash App, and they do crypto. And I'm not sure what else Square does, but I do know that they do that, and I know that they're a pretty sizable company as well. And then you have C3 AI, which is a mid-cap AI company, which has the capability, in my opinion, to become large enough to be like NVIDIA or Tesla or something like that. So you're getting incredible diversity here, which has the potential to have massive growth over time, assuming that we're in the right conditions and all of these companies are able to grow unencumbered because of extenuating circumstances like the Fed hiking rates or government trying to get involved with antitrust lawsuits or some nonsense like that. Okay. So it is available on Robinhood, as you guys see. We do not have any currently. We're going to wait to see what the first dividend payment is, like we always do. There's plenty of other funds that we can pick up in the meantime, or single stocks, or whatever we choose to buy, crypto, so on, so on. But it's available to buy on the market. If you guys want to go get it, you can. I'm not sure what other platforms it's on besides this one. I haven't checked just yet because I just got home from the gym. But as you guys can see here on TradingView, there is 3 days of price action so far. So even if it's not paying a dividend yet, at some point, from what we've seen, these guys are consistent. They're about their business. They pay on time every time, pretty much. So there's no question about whether you guys will get paid a dividend or not. That I am sure of, not financial advice. But if you want to go buy it, you can. So anyways, this is our 3 reasons why we think the YMAX, YieldMax fund of funds could be a great high income ETF to buy into. So hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.